There is some market anxiety out there, that's for sure. We're going to talk about that today, you guys. Thanks for joining me. Big week this week in the economy. We will see what happens with the Fed decision and so much else going on. It seems like so much has happened since last week when I was talking about Silicon Valley Bank, and here we are way beyond that with some other drama to discuss. So let's get into it. So this Wednesday, important day, the Fed will meet. This has always been on the calendar, but we kind of had an idea of what was going to happen on Wednesday before last week's drama played out with Silicon Valley Bank and First Republic and now Credit Suisse. So it remains to be seen what will happen on Wednesday, but it'll be important to see what the Fed decision is and also what Jerome Powell has to say at the press conference. So make sure to pay attention to that if you're into this stuff, because that will say a lot. But we basically have a couple different opinions going on now. So before everything changed with these banks in the last week, everyone was pretty set on at least a 25 basis point hike by the Fed, if not 50. And now there's some varying opinions that the Fed needs to actually pause and or cut rates because they have been a big player in what has happened to Silicon Valley Bank and the other banks as well by raising interest rates so aggressively, so quickly. So talking about that, here's an opinion piece I wanted to share because this is what some of those thoughts are out there. It's not a kill at all cost mission. Cut interest rates now to prevent a full-blown banking crisis. So this goes on to talk about how if they cut interest rates by 1 percentage point, it would eliminate half the banking industry's unrealized losses in one fell swoop. It would ensure no contagion, and they are saying that this needs to be done. Otherwise, we're going to have a liquidity crisis and a credit crunch. So that is that opinion. So there's folks out there and economists saying that the Fed needs to really back off. And then there are folks saying that they need to continue the fight. And we're going to talk about those opinions as well in a second. But why do we care about all of this, you guys? We care because this affects mortgage rates and that then affects housing, of course. Just a quick note, though, there were a couple other things that happened last week and over the weekend, just to catch you up on that. So we had First Republic Bank. On Thursday afternoon, a consortium of 11 U.S. banking giants announced they would funnel $30 billion in deposits to First Republic. So because they feared that would be the next institution to fail. And then over the weekend, UBS has bought Credit Suisse, I think for $2 billion, something crazy. So a lot has been going on. I'm sure we're not at the end of the drama yet. I wouldn't be surprised if there's a little bit more fallout this week. So we'll see what happens. But let's talk mortgage rates. So last week, mortgage demand for mortgages increased 6.5% from the prior week. We saw some big changes in mortgage rates last week. They went down quite a bit. I believe like mid sixes, maybe low sixes. And we had been on an increase week over week for the last few weeks. Especially February was not a pretty month for rates. So this has totally changed the course of rates, which is interesting to see. And again, why we care is because this then affects demand in our real estate market. And I'll tell you, I don't know if it was due to rates last week, but last week was crazy for me. And I saw a lot of different activity in the market. And I'll talk a little bit about that at the end of this video. I'll share a story with you guys. So mortgage rates. This is an interesting article from Mortgage News Daily. So they have a totally different opinion than the opinion that I just shared. The Fed will still raise rates in March, and that's why rates may keep falling. So it talks a little bit about the relationship between the federal funds rate and the mortgage interest rates because they're not directly connected. Just because the federal funds rate goes up does not mean that mortgage rates go up. There's a lot of other factors that play a role into that. But this basically talks about if they hike rates next week, meaning this week, because this was written at the end of last week. It will signal that additional rate hikes are possible, and will continue to fight inflation. So they're saying if they keep on that path, eventually it's going to slow down the economy because that's what it's meant to do. And we will eventually be in possibly a recession. And at that point, rates then are cut typically, or they pause on rate hikes. And so this is kind of saying for mortgage rates, the Fed needs to continue on their aggressive path, because ultimately that's what will impact rates at the end of the day to start to go down once we kind of get over this hump. So thought that was an interesting article, and we'll see where things go. It's so hard to know what's going to happen exactly with so many changes in the financial system right now. And it's very hard to anticipate what could come out next, because every time you think you've seen it all, then there's something new that comes up. So we'll have to keep an eye on all of that. But let's talk about what's going on in Phoenix. And first, if you're new here, or if you get any information that is valuable out of these videos, I'd appreciate if you would subscribe and or hit the like button and be part of our community. So, Cromford Market Index, 133.4. For anyone who is not familiar, anything over 110 is considered a seller's market. So the Cromford report is local to Phoenix. They analyze all the data in the MLS, measure supply and demand, and this index helps us understand those factors. So they have supply here at 62.4, and they consider 100 being that kind of normal range. So we're about 38% below normal in terms of our supply, which means homes on the market. Demand is at 83.2. Again, with 100 being normal, that's about 17% below normal for demand. But we do have demand that is outweighing supply, which is therefore putting us into a quote unquote seller's market. And again, this is a very mild seller's market. This is just saying that we have more buyers than we have sellers right now. And I can tell you when I get into my stories that that is true at the moment. Saw some interesting stuff this weekend. So that's where we stand with the Cromford Market Index. This is for the Phoenix metro area as a whole. And then if we look at, let me get this over here. If we look at every city separately, you can see what their index is. Chandler leading the pack over 200. So definitely in a seller's market in Chandler. If you're buying there, keep that in mind. You are probably going to be competing against other buyers in that market, especially if that house is priced correctly or competitively. And then as a seller, that's great news for you. The green arrows mean it's a positive change for a seller month over month. And the red arrows mean it was a negative change for a seller. So Tempe and Paradise Valley are the only two that we're seeing here with a red arrow. The increase month over month for all of these cities on average was about 11%. Which is a deceleration from what we saw, I think it was last week, was about 12%. So even though these numbers continue to move in the direction that is positive for sellers, they are moving at a slower pace. So as of this last week, it was a little bit slow, but we'll see if things change now that we have had some lower mortgage rates and maybe a bit more activity. And then very strong in the market, in addition to Chandler, is Gilbert and Peoria. Those are both up about 20% from 4 weeks ago. So that's a pretty big increase. So hopefully this is helpful for you to see where things are at in your city, whether you're a buyer or seller. Just gives you a good idea of supply and demand and where things are headed. But we pretty much only have Buckeye and Maricopa and Queen Creek in buyer's markets. Everything else is either balanced or in a seller's market. Goodyear, Surprise, those are in balance, anywhere between 90 to 110. And then Paradise Valley and above, technically in a seller's market. So interesting to see how things have flipped, because back in December, everything seemed to be in a buyer's market. So while all of this is positive news for sellers, we're seeing a lot of uptick. Our sales rates are not looking so hot, but it's interesting because they've gone up quite a bit since December. So in terms of sales per month, no surprise that our activity is low. Our sales rate's about 25% below last year. It's pretty low. However, in the fall of last year, towards the end of the year, our sales rate was like 44% below the year prior. So we have gained some ground. There's been some more activity. You can see the pink line here has gone up since the start of the year. Over the last week, there's been a little bit of a slowdown in terms of number of sales, but it'll be interesting to see where this goes because I was anticipating it to start to taper off until last week when we saw rates change so much and, all of these unexpected things taking place. So we'll see what happens with the sales per month there. Also have a few updates in terms of purchases for different types of buyers. So iBuyers in particular. A lot of you ask questions about the open door, offer pad types of buyers and what's going on with them. Their purchases year over year are down 95%. Which is not surprising. They have a pretty large number of inventory that they're trying to sell off. And last month, I think it was last week, I shared some detail about those numbers. So they have really started to sell more, which is good for them. But their purchases are down 95%. So they are not buying a lot of houses. They're more sellers than buyers right now. Institutional investor purchases are down about 69%. And then we also have flip purchases are down about 50%. So just a few numbers for you to consider understanding, what's going on in the market with different types of buyers. So iBuyers down 95%, institutional investors down 69%, and flips are down 50%. And this is all year over year. So, and then in addition to that, our sales are down 25% year over year. So that's what's going on in terms of the activity. But let me tell you what happened to me last week. So whether it was rates or good timing or what, I don't know. But I did have a couple listings go live last week. And over the weekend, on one of them, we saw about 30 showings, which I was totally surprised with. I knew we would get some good activity, but 30 showings was a lot. And today we're going to be reviewing offers, and I think we ended up with about 8 offers on that house. The other property that I listed this weekend, we have, I think we had about 10 showings or so. And that house didn't go live until late on Saturday. So that was mostly on Sunday. And I believe we have 2 to 3 offers at this point that we're going to be looking into today and tomorrow. So there was a lot of activity last week. And again, both of these are priced right, in my opinion. They weren't priced low. And so to see all of this activity is pretty interesting, whether it was rates or just the time of year, or people have decided to get off the fence, or if these houses are just perfect, I don't know. So just wanted to share that because I think it is important to know what's going on the ground floor, aside from just all of the data that I share and these numbers and charts and graphs. That's just kind of some real-time stuff. So it'll be interesting to see if next month it wasn't just me that had that experience, if we start to see an uptick in number of sales and listings going under contract and that kind of thing. So anyway, thanks for joining me, you guys. Check the description below for some helpful resources. You can get an instant home valuation or search my MLS for homes for sale, or set up a time for a discovery call if you want to talk more about your real estate situation. So I will be back later this week and with some more data on what's going on in the market. I'm Caitlin McKegg with the Desert Dreamers team.